Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot, but before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could go directly to incomeinvestors.com. While you're there, you could sign up for some free reports that we offer to our readers, and they get delivered to your inbox. Strong oil prices throughout summer meant pain at pump for drivers. While oil prices looked like they were going to retreat a little bit in October, crude oil prices have been rising since the eruption of violence between Israel and Hamas. This has sparked fears that geopolitical tensions could spread across the entire Middle East and threaten the world's energy supply. Typically, gas prices fall during autumn months after summer surge, but recent events in Israel could mean additional prolonged higher oil prices, which will impact gas prices and more broadly, U.S. households. And that's where today's income pick, CrossAmerica Partners LP, traded on New York Stock Exchange under symbol CAPL, comes in. John?
Yeah, thanks, Mel. CrossAmerica Partners LP is a leading U.S. wholesale distributor of motor fuels, operator of convenience stores, and owner and lessee of real estate used in the retail distribution of motor fuels. The geographic footprint that spans 34 U.S. states, CrossAmerica Partners distributes branded and unbranded petroleum for motor vehicles to over 1,700 locations. Now, in 2022, CrossAmerica distributed more than 1.3 billion gallons of fuel. It also operates convenience stores in 13 states in the eastern U.S., under 7 brands. The sites offer food, various essentials, and car washes. Some locations are also paired with prominent national brands such as Arby's, Dunkin's, and Subway. The partnership has well-established relationships with several major oil companies, including Exxon, BP, Shell, and Marathon.
Recently reported another strong quarter with net income and adjusted EBITDA growth.
Yeah, for the second quarter ended June 30th, CrossAmerica reported net income of $14.5 million, and that's up from $14 million in the same period last year. Adjusted EBITDA inched up to $42.2 million from $41.4 million. Distributable cash flow came in at $30.4 million, which was down slightly from $32.4 million in the second quarter of 2022. But the distribution coverage was pretty strong during the second quarter at 1.53 times. The distribution coverage ratio for the 12 trailing months actually improved to 1.68 times from 1.48 times in the second quarter of 2022.
And it announced second quarter distribution of 52.5 cents.
Yes, thanks to its stable cash flow from real estate, rental income, and motor fuel distribution, CrossAmerica is able to provide income hogs with a reliable high-yield dividend. In the second quarter, it declared a dividend of, as you were saying, 52.5 cents per share, or $2.10 on an annual basis. Now, this works out to a massive yield of 10.07%. The distribution is safe too. The company targets a coverage ratio of 1.2 times. Its coverage ratio in the second quarter was actually 1.5 times, and the trailing distribution, as we just noted, was 1.6 times. Now, while the company's unit payout has held steady at 52.5 cents, growing profitability, I should see it begin to raise its quarterly payouts at some time. Soon. Between 2013 and 2017, it actually raised its quarterly payout 19 times.
And finally, let's talk about how our CrossAmerica units doing.
Yeah, they've done really well since the pandemic, and they're trading near record levels. CAPL units have actually hit a new all-time high of $22.05 back in April. Now, CrossAmerica partner units tumbled in May, much like the broader market, on concerns about regional banking issues, in particular the collapse of Silicon Valley Bank, if you'll remember. Rising interest rates and inflation also made investors a little nervous, but you can't hold a good company down forever. Strong financial results in the summer driving season helped propel CAPL significantly higher since July. As of this recording, CrossAmerica Partners units are trading at around $21.45 per unit, and they're up roughly 15% year to date and 25% year over year.
John, thank you so much for your analysis. Where concerns of hard landing and recessions were headwinds to oil and gas energy stocks, the International Monetary Fund now believes that there is a greater chance of soft landing. This would certainly bode well for CrossAmerica Partners LP, though it has great momentum no matter how the economy plays out. It reported outstanding fourth quarter and full year results, and recently reported solid second quarter results, which included net income and adjusted EBITDA growth. Despite economic uncertainty, the outlook for CrossAmerica its units, and high yield dividend remain robust, with the company's strong balance sheet, high barrier to entry, long-term contracts with major integrated oil companies, and a strong diversification across geographies and operating segments supporting its long-term growth. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.